Hi there, welcome to this masterclass on PreferForex mentorship program, and I would like to thank you for joining here. In this class, we'll discuss on accurate market mapping, what is the real break-of structure, and finding the potential supply and demand or point of interest. Most importantly, we'll discuss on why a trader can't identify the actual break-of structure and trading range, which is significant to get a good entry point. You may see many assumption trading codes, but you may also notice some are often misleading information on break of structure, order block, or imbalance. Trading with a wrong concept is dangerous when you trade with real money. In this chart, you can see some higher high breaks, but which are the real break of structure and which high and low should be considered as a swing point in terms of liquidity transaction, where is the inside or outside liquidity, and most importantly, which PY is potential here to get the low risk entry. Proper market mapping is crucial. If you know how to accurately map the market, identify the recent swing points, and recognize the real break-of structure of the market, then you are almost done with market analysis. On the other hand, incorrect market mapping can lead to significant losses because the market moves rhythmically and you have to catch the rhythm. Okay, let's analyze this movement. Here you can see there is a higher high break. And this is another higher high break. But here you can see the price break the higher low. Among those breaks, which one is the real break of structure? To be a real break of structure, the price requires some injection of liquidity. Liquidity is essential for the market to function effectively. How can you justify a break of structure when there is no footprint of liquidity transactions? Look at this movement. You may mark this break as a break of structure, and also you may mark this area as a demand or PY zone where you want to trade. But observe this movement. This movement doesn't involve any liquidity transaction. It is just a retracement. It doesn't take any liquidity. Without any liquidity, you can't mark any high or low break as a break of structure. Most probably, the price will consider this low as liquidity. In our mentorship program, you will have several videos that will vividly teach you about accurate market mapping. Same here. This is not any swing point. This movement doesn't involve any liquidity transactions. You may think this is the break of structure and the market structure has been shifted here. You may mark this zone as a supply zone where you wanna trade. But this is an incorrect way of analyzing or market mapping. Why it is not? Because to shift the market structure, the price must break the swing low point. This is not a swing low point, so this is not the break of a structure. To shift a bullish structure to bearish, the market must break the swing low. It is crucial to detect the recent swing point as it indicates the recent trading range. Our mentorship program will teach you how to identify the swing point and distinguish it from a high or low. Now look at this higher high break. This movement takes the liquidity of several lows here and here. Both inside and outside liquidity it takes. And this break is the real break of a structure. Okay. So among those break, this is only the correct break of a structure. After getting the break of a structure, the next step is to find the recent trading range and then find out the high probable supply or demand or POI zone. POI is the zone where we will look for the setup. However, detecting the potential POI is very important because your winning rate of trade depends on how strong your POI is. In a movement, you may encounter several points of interest, POI, or you can say supply or demand areas. It is important to choose the POI for your entry that has a high probability of success. It needs liquidity transactions and proper inefficiency. Then the POI zone requires a liquidity point as fuel, which will attract the price to test this specific POI. Finding out the proper inefficiency is equally significant. It is important to identify inefficiency accurately. This involves closely observing candle formation, not just looking for price gaps between three candle formation. Sometimes you need to include several candle formation to identify the actual inefficiency or imbalance. In our mentorship program, you will have detailed discussion on how to detect the high probable POI or supply demand and identifying actual imbalance. So here is our potential POI. Let's see how the price will play here. As you can see, the price only respects the high probable POI and continue moving bullish. It doesn't respect the other zone that has been marked incorrectly. I hope you understand the importance of proper market mapping and identifying high probable POI. Efficient market mapping will save you time. You don't need to be glued to the chart to monitor constantly for trading opportunities. By accurately mapping the market and placing orders at your potential point of interest, you can let the market work for you. Traders are often amazed by seeing our secure trades and ask us to learn this trading style many times. In the last vacation, we managed time to build these codes. That's a vast opportunity for you. Now you can trade currency, commodity or stock by yourself like a pro without getting signals from anywhere. This course is also ideal for prop firm traders as it is a very low risk and disciplined trading method, which is a fundamental requirement for trading in a prop firm. Here you can see some analysis and corresponding results. The direct entry method has been applied here. You learn why we apply the direct limit order on this type of setup without any further confirmation. You will also learn 4 more different types of low-risk entry method in this mentorship program. Since we prioritize low-risk entry, this mentorship program is also well suited for prop firm trading. Our course provides extensive training including systematic description of all components of market mapping, real break-of structure, differentiating a break-of structure from a high or low break, identifying where the liquidity is, removing all misconceptions, identification of swing points and trading ranges, detection of point of interest, criteria used to measure the strength of POI, 5 types of low-risk entry rules to ensure best risk-reward ratio, rules of placing safe take profit and stop-loss levels. I hope you will find our mentorship program as a game changer. Thank you for participating in this masterclass.